All right, good morning and welcome back to the New York session 2 for 14th of April. It is 9:30 a.m. Eastern, and let's get started straight away with the Euro USD 4-hour chart. What we are seeing right now is wave, the third wave since the first session for the today, which we are discussing around the Tokyo Sydney overlap. All right, when we were in the Sydney Tokyo overlap, it was 3 down. When we met in the London session, it was 3 up, back towards 1.138090 handle. And now, while we are in the New York, just beginning to cut loose on the south side, where it looks like potential wave C is underway, could be the first wave within the proposed triangle structure. You see, the proposed triangle structure, if it is unfolding as a triangle, then that would be the first wave A of the triangle, and then B, C, that would be the triangle proposed structure. And if it is not unfolding as a triangle and it's simply unfolding as a 335 flat, then we should be seeing prices dragging lower directly from here, possibly pushing through 1.1175, which is the 28% or 21% retracement, possibly towards the 38.2% as well, which is showing around 1.0980. All right. So that's according to the price action, what we are expecting now in the euro. There would be some sideways action. That's what is the most common expectation from here on. Now let's discuss the wave structure point of view. Euro has completed minute degree wave 1. Okay, I can zoom out a bit. Just to bring the entire chart view. There you are. So Euro has completed minute wave 1, 2 and extended minute wave 3 has also completed around 1.0475 over the last week. And now it is kind of progressing towards the minute wave 4. I don't think it would take so many days because the entire rally has materialized quite quick as compared to what was expected. And wave 4, if you use the channeling technique, would also be quite sharp. In terms of time, it won't take that much time. Maybe you can move wave 4 over here and also it makes a lot of sense if wave 5 falls within that channel as well. Remains to be seen how quick prices reach towards 1170, and I think 1170 would be the minimum drop that we are looking, or we would be looking to enter or re-enter on the long side. Okay, so that's the wave structure story. And now the trading point of view. Ideally, we are flat. We're absolutely flat. There's no long positions for short-term traders which are active, and certainly there might be a partial position active on the long side for positional traders. But otherwise, we are absolutely flat. We are waiting for price action to decline and at least form a first potential low at 1.117580 before initiating further longs there. All right, so all three perspectives discussed: uh, wave perspective, price perspective, and the trading perspective. All right, so the trend still remains on the north side. We're kind of still one more high away. Projection for that particular high is towards 1.19 if everything goes correct or everything goes right. Till now, price action has unfolded into three waves, where the third wave was extended at a minute degree. Within that, the minute wave 3 also got extended. Uh, as you can see, the sub-minute wave 5 or 5 waves at the sub-minute degree unfolding here. All right. So that's the story in the Euro USD. We are sitting on the sidelines for now, waiting for price action to drop lower. I think it's about 150 points lower from where prices are trading right now. Okay, let's move on to the dollar index, please. All right, that what we are seeing on the screen right now is a 4-hour chart for the dollar index. Um, First, let us understand the price action point of view. A potential flat or a triangle is underway now. As you can see, price action now picking up very sharply from where we had left during the London times, and it is neatly pushing a 3-3 potential 335 in the making. If that is correct, then we would see price action rallying all the way towards 101.39 in the near term. All right, 101.39, 101.40 would be a good place to re-enter on the short side. All right, now if it is not unfolding as a flat, like if it's not unfolding as a 335, then it would be like a triangle structure where we can expect uh, an absolutely sideways action before the last wave lower. All right, the probability of a sideways or a probability of a triangle remains quite high, as it is already wave 4. Normally wave 4 would unfold as a triangle preceding the fifth wave or the thrust wave lower, and if it is unfolding as a triangle, it is also going to give us uh, an edge to build our short positions next time, because we can really figure out wave A, B, C, D, and E, and at the end of E we can re-enter on the short side to take advantage of the thrust wave lower. All right, but it's going to take a while before prices reach there. I will take a trend line note. We will push the trend line, drag the trend line lower, and also we will try and see if the channel, sorry, it's actually 1 and 3, back to wave 2. So that could be the triangle consolidation zone, or maybe a flat reaching up to 1.10150. Right, so that's the price action point of view. Price action point of view, 101.5060 zone could be the next entry for the for the US dollar on the south side, please. Now looking at the wave structure, let me compress a bit and bring it up on the chart, the complete view. Here it is. We've got a a potential 5-wave decline is underway, and the only thing we need to push is or change is slightly compress what was expanded quite a bit. That could be wave 4, and lower thereafter could be wave 5. All right. So third wave, extended third wave looks complete now. Uh, and we can now expect wave 4 of a minute degree. It's already underway, it seems like. Okay, so third wave, which was extended, also saw the third wave of a minute degree extend, and even the sub-minute wave 3 got extended. So ideally speaking, it's an extension at 3 particular degrees. The first one, the minute wave 3, second one is the minute wave 3, and the third one was the sub-minute wave 3. So quite a bit of extensions here. We are now working towards a potential wave 4 rally. Ideally, it should go through the 38.2%. It can probably go towards 102 as well, 103 as well, which is again a neat little. I mean, it's a it would act like a magnet. That's what we have studied. The previous wave 4 of 1 lesser degree, all right, where prices would really get attracted like a magnet, and it might also give it an impression of a change in the trend, but that's when things start reversing lower again. Right, so keep an eye. Going bullish is quite aggressive. So the trading point of view now is to remain flat, after having booked profits completely over the last week. It was Thursday or Friday. Even now, if complete profits are not being taken, remember we went short around 104, I suppose. Not if not 104, at least around 103.16. Still about if you're not yet taken profits, you can book it right now as well. All right. Positional traders might have a couple small unit positions on the short side active, but otherwise it's also recommended to completely get out of your short positions by taking profits. In such a fast moving market, maybe a couple of 100 points movement would not take much time. Ideally, even if it's going to go sideways, I mean, of course, there are 5 trading days now, so maybe this week could go within the sideways action. All right, but we would rather wait patiently and enter at the right price um, than doing it right now. All right. So that's the three perspective of the dollar index: wave perspective, price perspective, and trade perspective. Pound, we have already adjusted or requested to book profits, so let's skip pound for now. Okay, but before going to gold, I think it's a good idea to at least find out the next potential entry in pound, like what we have done in the euros and the dollar indexes. The next potential entry in the GBP USD, if it is the wave 4 in the making, and I think it's going to be an absolute flat structure. Where we are right now we are witnessing a potential 5-wave rally, which just fell short from the previous high. So it's a bit unusual for pound to do to fall a bit short, but what has happened, and it looks like wave 4 could be in the making now. So that's the price action perspective. Also, to add the price action perspective, we would like to emphasize, I mean, it has already dropped to 61.8%, so it's no point discussing the 38 point or 50%. So whether it's a running flat or I don't know if that's. I think we've got an impulse here already. That's a very confusing fact. Or maybe the three-wave rally is just complete as a wave B, and wave C could be now underway. All right, but it's better avoided to trade. Avoid. It's better to be avoiding to trade GBP USD right now as we speak. Uh, Sit on the sidelines. It's good to be sitting on the sidelines, and if you will not yet book profits, then it is still a good place to take profits. All right, and the 50% mark, this is what we were here to find out. The next potential entry on the long side could could be back again around 12 or 2700 mark. All right, so until that, aggressive shorts can be taken, but it's best avoiding because we would be going absolutely against the trend. And believe it or not, anything that we have traded towards the trend in the past 6 weeks or 8 weeks has always yielded profits, except for the fact that when we tried doing it in gold, we completely lost it. So it's better not to try and trade on the counter trend side. We will now wait towards prices to drop towards 2700 levels, all right, before initiating long positions again. And now let's have a look at gold. Okay, gold. I mean, if you look at the wave structure first, the wave structure in gold is indicating uh, potential fifth wave termination at 3 different degrees. When we say 3 different degrees, it's at the minor, which is 3, 4, and 5. Okay, minute, which is circled here as Roman, and the third degree is not mentioned here, but it is the minute degree, which is again wave 1, 2, 3, possible wave 4, and maybe one more high left to terminate that. So maybe wave 5 is terminating at 3 different degrees. This is the wave structure point of view, and let me try and take the extension. It's showing to be pushing around the 3300 mark, all right, and which is close to 3280 at least. That's the 0.618 extension of the previous target. So this is one thing where we are either in the last wave of structurally we are in the last wave of the minor wave 5 and minute wave 5 and also minute wave 5. But we need to keep another alternate, which is very much possible if prices stay about 2940 going forward, 4050. And that alternate count is, we've got minute wave 3 and 4 complete, and then minute wave 5 is extending right now, and it's actually producing wave 3 within the fifth wave. All right, so that is something we need to be prepared for. Now, ideally, let's now come to the trading point of view. First things first, we have booked profits on the shorts that we have taken aggressively around the 32.20 mark. All right, that's the first thing. So no trades are active in gold as we speak, and we are not recommending any short or long call at this point in time, because shorts would be too aggressive. We might be premature entering on the short side, and we are avoiding longs because that's just about a few points away from the all-time highs, which is registered around the 2240 mark, 3240 mark. All right. So maybe there's no doubt we might go one more high towards the 3260, and there's nothing wrong if you personally want to initiate long positions right now, but the stop loss should go absolutely tight around the 3023, which is again uh, almost 200 points of risk, and the reward is not that much. So we've got to be very careful if you are initiating longs, but there are chances for one more high to be print before bears are back in control again. All right, so that's the story in gold. Just a quick view on the hourly chart. If you look at the wave structure from 2950, it looks like wave 1, 2, an extended wave 3, possible wave 4, expanded, and then wave 5. So if you look at the magnitude of the fifth wave, in case the third wave is extended, in this case it is, then let's count the target. Let's try and project the target, please. 2957, 3027. So almost 70 points. And if we add 70 to today's low at 3160.94, it is going to be around 3164, 3260 something. So if you'd like to go very tightly, then you can initiate long positions right now around the 3204. You can place a stop loss just below today's intraday low at 3194, which is around, you can place around 3180 or so, and target around 3260. That would be a good risk reward ratio just in case. All right, so aggressive short-term traders on the long side might follow in this particular trade that we discussed, but that's on the long side. And if we go by the channel, price action is just about testing the channel support. Slight penetration on the south side, but that's okay. If we go on a 15 minutes time frame and see what is happening there, okay, the first resistance is now coming, or the first resistance is seen around the 3226 mark. So a push through 3226 and a pullback would certainly initiate or favor bullish sentiment at least for one more leg higher. All right, so that those are three perspectives for gold, wave, trade, and the price. And if you look at the daily chart, I mean, this is what I like seeing actually. The fifth wave is testing the Elliott channel, and a reversal here, a bearish reversal here, cannot be ruled out. There's a doji in the making. All right, so we got to be careful if you are going long. It cannot be done without a tight stop loss at 31.80 for sure. All right, sir. And finally, the Bitcoin, we still have waiting periods in Bitcoin towards the 87 and 92 range. But again, last time in the London session, we were discussing a potential long trade as well in Bitcoin. When prices drop below 80, we will wait for prices to drop below 80 and probably initiate some long positions if possible with a very tight stop loss around the 70, 74 mark. All right, so that's the story in Bitcoin. We don't have any trade here in Bitcoin, but uh, we are still in a counter trend, remember, and that's why we would be cautiously bullish, not from this price, but somewhere around the 80,000 mark. All right. So those are the stories as we move into the New York session 2 for the day, and we'll be now back in a few hours to touch base or take the story or continue the story in the Tokyo Sydney overlap. Until that time, once again, thank you for tuning in, and please do take care and God bless. Goodbye.